Hey guys, how's it going? Before I start, just want to wish everyone a happy Diwali from all of us here at Money Jar, and I hope you guys have a great year ahead, preferably full of money jars. So today, I want to talk to something that a lot of people wonder about is a lot of you have investments in mutual funds, and you might check your portfolio sometimes to see how it's doing, and you would have noticed that the value of your portfolio goes up and down, so which is basically the value of your mutual fund investments keeps going up and down, and maybe you must have wondered what causes this. So I thought it would be good for you to understand the cause of this so that you have a better hold on your investments. So to understand what causes the prices of mutual funds to go up and down, it's important to know what a mutual fund really is. You invest in a mutual fund, but do you know how it works or what it is? So basically, a mutual fund is a bunch of people coming together, which are the investors in this case, one of them being you, and deciding that, hey, we're going to pool in all our money and then give it to someone who's experienced that investing, which is the fund manager in this case. And what you tell him is, hey, take all our money and invest it for us, and then let us know what our profits or losses, and that is what would be our share of the mutual fund gain or loss. So once the fund manager gets all the money from all of us, which are the investors, he decides to invest this money in a group of stocks or portfolio of stocks. And this portfolio can be, can depend on the mandate that he's given. So you must have heard of a large cap fund or a mid cap fund or a small cap fund, and you may have wondered what that means. All that means is basically the kind of stocks that he can invest in. So a large cap fund only invests in really big companies, so which have typically lower risk and lower return possibility of return than say a small cap fund. So say once the fund manager gets the money from all of us, he puts it in a portfolio of say 20 to 60 stocks. Now, how does that affect the price of the mutual fund? So the price of the mutual fund is basically nothing but just the weighted average of the gain or the loss of each individual stock in the portfolio. So maybe if this is hard to understand, think of a mutual fund that only has two stocks in its portfolio, and each of them has a 50-50% weightage in the mutual fund. So one goes up by 1% and the other goes up by 2% in a day. The mutual fund would have gone up by 1.5%, which is the weighted average of the stocks in the portfolio. So say if on an average the stocks in the portfolio goes up, the mutual fund price will go up, and vice versa. So yeah, the mutual fund's not getting the NAV randomly from somewhere. It is just a derivative of the stocks that it invests in. So I hope knowing this will give you a better understanding of your investments. One difference between stock prices and mutual fund NAVs is, if you've ever bought or sold stocks, you know that the price of the stock is constantly quoted on the stock market. So say if you were to buy it at 1 o'clock as compared to say 3 o'clock, you would get a different price. But one good thing with mutual funds for both beginners and advanced investors is that the price of the mutual fund is only quoted once a day, which is at the end of the day, once all the stock prices of its portfolio is known. So you are not subject to any volatility. You don't have to wonder, or hey, should I invest in a fund at 9 o'clock as compared to 11? Like there's only one price, and that reduces volatility and uncertainty. So yep, to summarize, the price of mutual funds just affected by the prices of the stocks that it invests in, and it's always just quoted once a day on working days. I hope you found that useful, and we'll catch up with you soon. Bye.